All right, welcome back. I'm the Wall Street Yardie. This is your weekly market report for the week of March 29th, 2026. First thing we want to look at is going to be oil. So the oil futures, we have to pay attention to oil, man. This shock in the market with the oil has been a very big deal. Of course, oil affects everything that we do, and we want to make sure we're paying attention to this. This is the biggest catalyst in the market right now. Everything is moving because of this. If oil prices go up, the market goes down. Simple as that. There's nothing more we need to really pay attention to. Going forward, we're going to pay attention to some inflation, but that inflation is affected by the price of oil. So looking at what we have here, we have our Brent crude oil. This is the oil that they get out of the Persian Gulf. This is the one that goes to a lot of places in Europe and Asia. We want to pay attention to what's going on with this one because it's going to affect prices in places like Japan, South Korea, places where the US gets a lot of their electronics manufacturing, and it's going to affect the shipping and everything else that goes along with it. So this is the high one right now at 108. But you see, we've also talked about watching oil and hoping oil gets down back into the 80s. And you see, we're not really getting into the 80s until September all the way to November before we see a thing like 85 where it can start feeling a little bit okay about the price of oil. Still a little higher than what we've been having over the last couple of years, where it's been around 65, 70. But 85, the market can probably tolerate that going forward without it affecting inflation too much. On the other side, you have the West Texas crude. This is the one that is produced in the Gulf in the US, right? So this is the US oil. So this is a lot of the oil that the US uses and refines. So this one is sitting at $100 barrel of oil is not something the market can tolerate. Okay, so when we see the Brent at 100 and the West Texas at 100, you know the market's going to be in for some pain for some while. And as we look at these over time, the market is expecting these prices to stay kind of high. We're not even seeing any dip into the 8s till August, right? So we're looking 4 to 6 months here of higher oil prices. And if the war drags on any longer, more than another 4 to 6 weeks, you're going to see these prices continue to go up the further out we go. And the longer this lasts, the higher inflation is going to be, and we're going to have some pain in the market. So let's get ready. Let's take a look into the charts here and see what we have coming up for this week and the levels that we need to be watching. All right, first chart we're going to take a look at here is the VIX. The VIX is the volatility index, S&P 500 index. What this one measures is the fear in the market. How much fear is there in the market? As this thing goes up, there's more fear in the market. As you can see, we've been heading up quite a bit here over the last few months. Ever since the beginning of the year, we really started taking that turn up. So even long before the war in Iran started, we started moving up in the VIX. So the market was going to be headed down. The market is the inverse reaction to the VIX, right? So if the VIX is going up, the S&P 500 is most likely going down. 9 out of 10 times, probably 9.5 out of 10 times, the market is going down if the VIX is going up, and vice versa. So if the VIX is coming down, like you see this big red candle, then the market is going to be going up, right? So you can usually measure that side by side, but I wanted to pay attention to this. Most importantly, we've been talking about the 25, 23 level. We need to see VIX get back below that before we can start to see any kind of upward motion in the market. Right now, this level is what we're watching, 23. Right now, we're sitting at 30. 30 is a very big relative high. As you can see, this is the highest candle we've had since the war started, and also all the way back to tariff day 4 now. And you see, there's very few times we even get to this level or higher. Very few, right? This is COVID, right? That was one, obvious. And then this was the world financial crisis back in 2008 when the market crashed and was down for 2 years. We're looking at monthly candles here. So each candle here represents 1 month, and you can see we're there multi-months. But this is a very rare occurrence, right? If I slide on back, you'll see even the dot-com crash back here in 2002, and then back here in 1998. We didn't really even stay up there that long for that one. And that was before the world financial crisis. That was the biggest crash at the time, right? So the VIX, we just want to keep an eye on it. We don't trade it, but we want to monitor it to see which way it's going. It helps to give us some direction and some guidance as far as what we're seeing. Whenever I see the VIX at 30, I start thinking bullish, honestly, because as you saw, we don't stay this high, and when we start coming down, just like I said, it's the inverse relationship of the S&P 500. So if the VIX starts coming down off of 30, as you see it did here, and you see it did here, then you're gonna start to see upward movement in the market. So let's jump right into the next chart, and we're gonna talk about the various levels we need to watch in the market, in the S&P 500, the DIA, the QQQs, and gold and silver, and we're going to get right on into it. All right. One more chart we're using here to watch the market sentiment, right, is our secret chart. So these are the top 8 S&P 500 names. These guys control 35% of price movement in the S&P 500, which is what we always refer to as the market. What you noticed here this week is we just kept going down last 3 days, and on Friday here you saw we broke through our level. So we had a support level we were watching last week. It was support back here, and we broke right on through that. We don't try to predict the market or which way it's going to go per se. We're just going to react, right? We're going to watch and wait, and when we break through like this with a big red candle and high volume, then we have to trust that we're heading on down to this next level. So we're going to see some more market pain. The other thing I wanted to show you on this chart, very important, is this cross here of my moving averages. This is what they call the death cross. This orange line is my 50-day moving average, and whenever the 50-day moving average moves below the 200-day moving average, that's what they call the death cross. Usually when you catch the death cross, we're heading into a bear market, meaning prices are going to go down, the market is going to continue to drop. And what you will usually see, actually, the way this is going to work out is that the market will continue down. We might even get down a little bit here, not all the way to our line, but we're going to see a bounce, and then we're going to see it come on right back down to the line. So that's what we're watching for. When we jump into the SPY chart, I want you to pay attention, because this death cross is going to be a little bit different here on the SPY. So we're going to pay attention to that and how the levels are playing on the SPY next. Okay, here we are on the SPY now. We're just speaking about the death cross on the secret chart, right? However, if you notice, this SPY, S&P 500 index, has not even come close to crossing the 200 yet. We're just starting to see the 20-day come down and cross below. So I have to keep paying attention. So this is why I like my secret chart, is it gives me a heads up of what's about to happen in the market. And whenever I see that happen, I can start to get ready and protect myself, or position myself in such a way that I can take advantage of the market. Our secret chart was showing that we're going to see more downside. So we have to trust that. We got the death cross. As I explained over there before, we're going to expect, even after the death cross, we might expect a little bounce up, and then it will continue on down. It won't just continue straight on down. We've had a pretty straight down on the SPY right now. So we do have to keep that in mind. We're waiting for a bounce. We got some mini bounces. These didn't really amount to real pivots or lower highs that we can truly trust yet. So that's what we're paying attention to. Today, we noticed that on Friday we crossed below this level here, the 635 level. We closed below it. Whenever we close below a level, we have to really pay attention. We had higher volume as well. So we want to make sure and see what's going to happen. So last week, our prediction kind of worked out. We hit it right there to, almost to the penny. But we got below it, actually. So what we're going to do here is we're going to move this down, move this prediction down. I'm not going to go as deep this time, because as I was discussing on the secret chart, we expect things to bounce a little bit due to the death cross. So I think we're going to come down here. This is a level, if you look to the left in history, you can find where we match up to that. And then I think we're going to bounce up from there. I don't expect us to get any back higher than 650. Expect us to get to 650 and reverse off of 650. There is a gap here, so we're going to watch the gap. We always watch the gaps, because gaps always also play support and resistance. So I'll drop my gap there so we have it for next week, and then we can go and pay attention to what happens or how price reacts to that level as well. So right now we're expecting a slightly lower, maybe Monday, Tuesday we come down and then we bounce up, maybe fill this gap and reverse. Or if we have a good week and the VIX comes down very big, because remember we spoke about the VIX a minute ago, anytime the VIX drops, that the S&P 500 to go up. So if the VIX drops very big, we get some reprieve on oil prices or anything like that, we might see 650. But I think once we get up to 650, we're going to see that probably reverse. This was playing support here, maybe playing a little resistance here, and I think it's going to play resistance again going forward in the future, right? So I'll make this a little bigger for us for next time. So that's what we're expecting next week. Small move down in the S&P 500. We have to watch this level. If we come up, bounce and reverse, then we're headed towards 615, 613 on the next move. Switching on over to the Qs. So NASDAQ 100, let's look at the levels here. What we want to pay attention to for this week. If you're trading any tech stocks, this is definitely a chart you want to pay attention to. Right here, we got a gap from back in September that we blew right through that gap actually on Friday. We're headed all the way down to our support level here. So this is charts look a little bit different from the SPY, but as you can see, our downside from last week, we clearly blew all the way through that one. So that's another big hit for the charts there. With this one, we're not looking for it to actually go down this week. I think we're going to find some support here at this level. VIX being at 30 is what gives me that confidence. When you like I mentioned on the VIX section, when VIX hits 30, it tends to just always pulls back. Whenever we get the VIX up that high, it always likes to come back. I don't think we're going to necessarily see the big V recovery or the big bounce recovery that everybody thinks. This war in Iran is going to take a longer toll. So I'm going to just create a new line here, and I think we're going to get a little bounce this week. Let's check our angle here on this one, and I think we're going to come on up a little bit on the SPY. This angle looks good for me. Match it up there, match it up there, match it here. See it here again. Anytime we get a nice little bounce, it looks like it's kind of what it looks like. So looks like with that bounce, we're looking like we're getting back up to fill this gap, which could then probably form resistance. I wouldn't be surprised if we get back all the way up to 580 and then reverse. If we do reverse off the 580, I think we're going to get another big leg down, probably another one looking something like this. And next week we'll chart that one. We do have another gap down here. Let's just mark that now, just in case we do break our support. We have that gap marker there. So that would be probably my ultimate downside low for probably most of the rest of the year. If that's how everything plays out. If we come back up, bounce reverse, we probably could come down to this level here very easily and find support around 532. So let's pay attention close to that. Like I said, oil is going to be the key factor here. So we want to make sure we're paying attention to the oil and what's happening with oil prices, because that's going to drive a lot of the market action. Over to the Dow Jones Industrial Index, the DIAs, the ETF. We saw here this week, we pulled up all the way up to the 200-day moving average, similar to what we had with the SPY. Again, no death cross yet, but we're seeing rejection here at the 200-day, 1, 2. Both times it tried to get up here, it just could not hold that level. Bounced, and every time it reversed, it came down, and this time it came down even harder. Broke through our support level here at 457, and with a big candle to the downside. Now, this volume is quite high, but it's still not above the average yet. So I think we could get a little bit more downside with the DIA. We have if we look to the left here, we have a gap that still has yet to be filled. So I think we come down to that gap fill there. So let's mark that on our chart. I think that's where we're headed to. If I'm looking at my angle here, remember I just pop the angle. I think this is where we're going to head to, is to the gap there. So we should see that by sometime next week, maybe Easter Monday. And we're going to see if we can get down to this level and bounce off and come back up. We might then get stuck in this range, or maybe even in this lower range below the gap and this 433, 434 level. So that's what we're watching on the DIA. Really nothing much to do here. I think, just based on what we've been saying, I do see we're going to get a little bounce in the market and come up. We do have a gap here above as well that needs to be filled. So very well that we can bounce off here, come back up to this gap. That might take a couple weeks, and then we can see what happens, whether the market continues back up, reclaims the 200-day level, or if it comes back down below. So this is how we play support and resistance. We watch the market, we let it give us the signals, we see where we can get confirmation. Like if we look back here, we came all the way down, found this support level, got some green, finally got a higher high, and then that's when we take off. So that's what we're going to do. We're going to be patient. We're going to let the market show us the hand, and then we're going to play the hand when it shows up. That setup is going to be very key to what we're doing. Next chart we have is the IWM small cap index, Russell 2000 small cap index. These are smaller companies we've been watching. If you trade small caps or smaller capitalization companies, these are the ones that might not be quite making any money yet. They're smaller in size. They don't bring in as much revenue. But as you can see here, these haven't dropped as hard as, say, the S&P or the NASDAQ or the DIA. So they seem to be finding a nice little range here, to be honest. We're looking somewhere between this 200-day moving average, my green line, and this dashed line here at the top. So we're kind of trapped in this range. We're going to see what's happening here. We found support at the 200 on the Russell 2000. So that's something, you know, I want to go look into, see if there's a story there that we might be able to take advantage of. And then we found support twice. So this is kind of the reverse of what we've been seeing, where we broke through the 200 on the NASDAQ and the SPY and could not get back above it. Instead, this time it's holding. So I thought we were going to come on through just like we did with NASDAQ and SPY, but we didn't do that last week, so we missed that call. This one I'm going to, you know, maybe take a little beat and see what the market does. So we're going to watch this level here. We do have a very tiny gap here between these candles Thursday, Friday. So we want to see if we can close above Friday's candle, and then we maybe head up to this one. So if you're looking at IWM, that's maybe one play. But if we do close below the 200, we're going to watch for the 200. We have some support here at 237, maybe bounce there, right? So not really a lot of room to play, but that's what we're going to do. So I would just kind of pause on this one. This is looking sideways, not necessarily advice, but this is what I'm seeing on the chart is, you know, we're kind of stuck in this range again, like we were back here earlier in the year, and even back in the fall of last year. So IWM tends to, you know, go sideways quite often sometimes. It's very sensitive to interest rates. So if we hear rumors of interest rates getting cut, IWM probably will take off. If the interest rates go higher, I do expect to see it go down. And there's a lot of talk about interest rates and what's going to happen in the next Fed meeting due to possible inflation due to the oil and the war in Iran. All right, we're looking at gold here now. The gold futures, man, this has been a wild ride. We have a cross here of the 20 crossing the 50. That's not necessarily the death cross, it's the lower moving averages. Death cross is traditionally the 50 crossing the 200. As you can see, we have quite a ways before that even happens. 50 is kind of flattening off, so maybe it starts leveling off and going higher. There's this big down wave. We found big support here at the 200-day moving average. We're gonna watch gold. Gold is very tricky right now. As the dollar gets stronger, you know, gold gets a little weak. If there's more inflation and the rates get higher, gold is gonna get weak again. So we got to pay attention, but I think we get a little bounce here for gold. So I think we get gold up to 46, 45 here going into the week. That probably will, you know, get us into the week after Easter, right? So we're going to see what's happening there. And if we can get gold closing above this level here, which was March 25th, close above there, then I could certainly see gold heading on up much higher in the short term. In the long term, I think gold is going to be a much bigger play, but we're going to watch the charts and see what happens. We might just get stuck in this wide range here for gold, but I think we see a bounce off gold here, and then we're going to come back next week and see what happens with gold. Let's take a quick look at silver. Silver is a very different story right now. Silver crossed that 50-day, you know, maybe a month ago, and it's been headed on down ever since. So it hasn't really found the support that gold found. We haven't gotten down to the 200-day yet, so let's see. I think that's where we're headed, to be honest. So looking for silver to get down to the 200-day moving average and then decide whether it's going to bounce off of that and give us the nice bounce we're looking for. But what concerns me with silver as I'm looking at the chart is we got this lower high from the all-time high, and then we got another lower high. So it's forming lower highs and it's also forming lower lows. So we got a lower low here, and then another lower low here. This low lower than this one, and then this one here lower than the one we were just looking at, right? So if we get another lower low, we're going to want to see silver break above 75 before we can have any confidence that it's catching fire and it's worth trading to the upside. Lastly, let's jump into crypto real quick, see what we got here. This is not looking good for the crypto folks. So my crypto friends out there, you know, we have obviously took this big, massive hit. We've been going sideways in our range for a while. Got some news that maybe we were going to get some policy changes that allows us to get back higher. That totally failed at that 75,000 level. Came back down, and now look what happened. We actually broke down here on Sunday. We're breaking down below our support level. We have another mini support here at 62. If we get below this, I gotta say, you know, Bitcoin is gonna head much lower. We have a 200-day moving average at 59, but I think if we break through our 62 level here, we're gonna really go for it. And I could totally see Bitcoin down at 50,000, right? In the near term, if this pain continues. We're looking at a weekly chart now, zoomed out so we could see where the next levels lower were. And this is a 200 week, right? So this is, you know, quite a ways. 200 weeks, that's what, 4 years of time. So we're getting back down to the level where Bitcoin was 4 years ago, right? You know, as far as the moving average goes. And then as you can see, this takes us all the way back to 2024. So you'd be losing 2 years of upward movement in Bitcoin if we get down to these levels. We're already flirting with it. I think we're going to get there. Maybe we do bounce off of this 200-week level. That would be nice. And then see it there. So again, we just got to be patient here. Flipping back over to the daily, we got to start to see some higher lows and higher highs form. I don't know if we're going to get that. Bitcoin has proven that it's not a place of storage for wealth. It's really a risk asset, meaning it's very speculative. People are going to take bets on Bitcoin. It's not money that if the market is going bad that they're going to throw it over here and try to be safe with Bitcoin. The market has to be going good for Bitcoin to go good. And right now the market is not looking good. We are below our 200-day moving average on the SPYs we've already talked about. Nothing good happens below the 200-day moving average, as they say. And we have to really pay attention to that. Now, the reason we keep looking at crypto, even given that terrible story, is that crypto usually leads because it is speculative, because people take bets on it. The risky money comes in earlier usually than the stable money when it comes. So when things start to turn around, you will see Bitcoin turn around first. So we like to keep watching that. And when we start to see Bitcoin start turning around first, then we're going to, you know, take our keys off that and go try to find places in the market to take advantage of some things. So Bitcoin is there. Ethereum still stuck in the same range, same story. This one doesn't look as bad. We haven't broken down our levels yet, but we're headed that way, right? So we continue to go lower here through the weekend. Let's see what Monday brings. And then we got to pay close attention to that. XRP, same story. So that's it for this week.